Hi, everyone. Let me know if you guys can hear me you can go ahead and put it in the chat box. I want to make sure this is working out well. If you can hear me. Hi, Brittany. Great, thanks, Sheila. Perfect, thanks, guys. We'll just give it like 1 minute before we get started. We'll go ahead and go to the next screen. So that's me. Thank you all for joining today for our first part of the ICHRA webinar series. I'm excited to be going over all of this with you all and hopefully break it down into a more easily manageable 3-part series because there is a lot to ICHRA. Such a great product, and if you've talked to me before, you know how passionate I am about it. So hopefully you'll learn a lot and feel more confident by the time we're done with this 3-part series. So today's focus is going to be what is an ICHRA, why it's gaining momentum, and how it compares to traditional group health plans. Before we get started, while we allow other people to get logged in here, there are some just general housekeeping. If you have any questions, please type them in the question box, and that's located in the top right-hand corner of the screen, and we will get to them at the end of the presentation. So I want to make sure I follow kind of the flow that I have for the webinar because I do kind of can sometimes go squirrel and go off track. So I'm just going to answer all the questions at the end. And also, sometimes you have questions that we are going to get to, but we just haven't gotten to. So that will be good. We'll just go ahead and type them in a box, and then I'll get to all of them at the end. I can stay over a little bit if we do go over the hour mark to stay on with anyone that has a lot of questions. And then obviously you will know how to get a hold of me, contact me, and we can offline go over any questions that you have as well. So, all right. So our agenda today, we're going to go over what an ICHRA is. We're going to go over why employers are switching to ICHRAs. We're going to go over the differences and comparisons of ICHRA versus traditional group health plans. I'm going to tell you some real life scenarios and the employee experience. I'm also, what's not on this agenda, kind of added it last minute. We're going to go over myths versus truths, and that's because there are a lot of myths out there. All right, and then we'll have the question and answer. So we're going to go broad before we go deep. So we're going to build on your foundation of understanding how ICHRA works and who it serves best. So what is an ICHRA? So ICHRA, for those of you, and I also do want to say there is a lot of different agents on this webinar today. We have some agents who do not have experience in the individual market. We have agents who don't have experience in the traditional group market. So I might be stating some very basics in either one of those worlds, but that's for the ones who don't have that experience. So if you are like, oh gosh, why is she telling me this ABC of individual market, that's for the group agents who maybe don't have that that good of an understanding of how the individual market works, or vice versa, the individual agents that don't have that understanding of the group world. So hopefully I'll break it down in as easy terms as I can for all parties involved. And if you already know something, great. I always say the more you hear something, the more it sticks. So it's not going to hurt to hear it again. So, all right. So ICHRA stands for Individual Coverage Health Reimbursement Arrangement. It is an employer-funded tax-free reimbursement for health insurance. So it allows the employers to reimburse employees for individual health insurance premiums. It's tax-free on both the employer and employee, and it offers a modern, flexible alternative to traditional group plans. Jess, are we going to do that? We had a little poll. Are we going to do that now, Jess?
Yeah, I can put that on now.
Yeah, let's go ahead and do it now, just because I'd like to see where everyone is at. So I would like to know currently, how confident do you feel confident about approaching a prospect about implementing an ICHRA? And then I would say I'm going to ask this again at the end of part 3, and see how everyone's confidence feels at that point. So we have about 54% who have voted so far. So yeah, if everyone can, if this is anonymous, so I'm not going to know who's selecting what, if you can just go ahead and just, I would like to know your confidence level. And maybe you're kind of in between the yes and the no. So I want you to put yes if you feel like 100% you can go prospect this out on your own, and you would feel like you really are, confident in doing that. And if you're not feeling at that point, then hit no or maybe. All right, so we have 7 who feel confident. That's great. So this is really going to be more of not much of a training exercise for those 7 people. They're just wanting to probably maybe reconfirm what they already know, or maybe they're hoping to hear something they don't already know. And for the no's and the maybes, I'm really hoping that this 3-part webinar series is really going to bring you up to that yes. And like I said, I'm going to re-ask you all in a few weeks once we finish part 3. So, all right, we have 88% voted. It's probably all that's going to be going to go ahead and vote at this point. So I'm going to end the poll and share the results. So we have 7 who said yes, 16%, and then we have 24 who said no, and 13 that said maybe. So, and that's kind of what I was expecting. I'm happy to see the 7 that said yes, actually. So, and then, like I said, hopefully we're going to really make all of you a lot more confident in bringing this as a possible solution to your clients and prospects. All right, so we're going to close this. All right, so let's go to the next one. Next slide. So ICHRA it's not new. It is kind of new, but it's not new anymore. So it started in 2019. The final rule was established in 2019. It was put into effect January 2020. So, I mean, in the whole scheme of things, it is relatively new, but what's really happening right now is people are realizing this is a game changer, and it really is. So HRAs, they've been around for a long time, since 2002. The ICHRA was essentially building on the QSARA, which was introduced to us in 2017. But it made the QSARA better because now it removed the employer size limits. So QSARA is for qualified small employers, where the ICHRA is for all size groups. And then it also allowed for the ability to establish classes so we could really customize the ICHRA. So it really is much better than the QSARA, and then because of all the different flexibility options that they have. So it took the best of all the earlier models, and it removed the key restrictions. So allowing employers of all sizes to offer the ICHRAs instead of traditional group health plans, and then enabling employees to purchase individual health insurance with employer reimbursements, and introducing, like I said, the employee class distinctions, which we're going to go over the next part 2, we're going to go over the different classes. But this gives the ability for businesses to really customize their benefit offerings. So why are employers switching? Cost predictability, administrative simplicity, no minimum participation, flexibility for employees, avoids annual renewal headaches. So for many employers, ICHRAs solve real pain points: budget control, simplicity, and employee empowerment. For employers, ICHRAs offer a flexible and cost-effective way to provide health benefits, allowing them to control the cost and customize plans for different employee groups. Employees benefit by having the freedom to choose their own individual health insurance that suits their needs rather than being limited to a one-size-fits-all like a traditional group plan offers. So let's look at the commonalities and the differences of ICHRA versus a traditional group health plan. One, as you'll see, and we're going to go through each of these, but one of the biggest advantages is that employers get to avoid that one-size-fits-all model of a traditional group health plan, because we know one size does not fit all when it comes to group health insurance or comes to your own health insurance for your family. So both ICHRA and traditional group health plans are ACA compliant. Both are employer sponsored. ICHRA is a group health product. Both are tax advantaged. So there's going to be no payroll taxes, and it's not going to be included in taxable wages to the employees. With an ICHRA, the administrative complexity is going to be low, as long as you have the right benefits consultant and payment vendors, where with a traditional group health plan, the administrative complexity could be moderate to high, depending on the size and the width of the benefits being offered. The financial risk for an ICHRA is low, because the employer's financial responsibility is only limited to whatever they have decided to contribute for the employees to get their individual health insurance plans, where the financial risk in a traditional group health plan is going to vary. It can be moderate to high. All carriers do have a minimum of what they will have the employer contribute towards those health insurance premiums. Typically it's 50%, but it does vary by carrier. Participation requirements, that can really be a reason why a group is maybe looking for an ICHRA, because they're not meeting those participation requirements that are required by traditional group health plans. So carriers do have minimums, and they're different, again, based on the carriers. With an ICHRA, there's no participation requirements. In fact, I just did a proposal yesterday for a group that has one employee, and we can do that with an ICHRA. The speed to implementation, that is going to be much different between the two. So with an ICHRA, we can get that in effect with 45 days or less from the time that you come to me and say, I would like a proposal. With a traditional group plan, that can take anywhere from 30 days to 3+ months. I will say that with a traditional group plan, you can a lot of times still be working on getting that into effect within the first week or two of that effective date. So if I had a group right now that wanted an ICHRA for 6/1, and if you come to me today, I'm going to say, I'm sorry, there's no way that's going to happen for a 6/1. If you came to me about a traditional group plan and we were kind of in the process of it at this point, we could still be working to get that 6/1 into the first week of June with a traditional group plan. So that is the difference. There's no retroactivating when it comes to ICHRAs, and that's because the employees are on ACA compliant individual health plans, and the government does not allow individual plans to be retroactivated. So we have to have that ICHRA completely done by that last day of the month in order to have that first of the month effective date. And with individual plans, they all have to be effective as of the first of a month. They cannot come into effect mid-month. So additional fees. So that's going to be when it comes to a traditional plan, the fees involved are going to be based on the kind of plan you have that employer attached to. So if it's a fully insured ACA group health plan, or grandmother, grandfather, there's even some of those plans out there still. Those are typically a PEPM, which is per enrolled employee per month fee. And then the self-insured plans, those could have a lot of fees to them. They can have administrative fees, stop loss, aggregate stop loss. If the pharmacy's unbundled, reporting fees, there's a lot of different fees that can be involved in having a self-insured plan in place. With an ICHRA, typically that is going to vary as well, as based on the consultant you're using, the payment platform, but there's always typically going to be a PEPM, so per enrolled employee per month. There are some ICHRA vendors out there that also have setup fees. Some of them have minimums. Some of them have annual fees as well involved. So there's some additional fees there. So there's going to be fees on both ends. Employee options. So with a traditional group plan, the options are going to be limited to what the employer has decided to make available to those employees. Typically, that's going to be 1 to 2 plan choices. Sometimes it's 3 to 4 of those larger groups, but typically, especially for a small group, it's going to be 1 plan. The employee can choose to be on that plan or choose to not. And then kind of when you get to that mid-size, that's where that 2 plans come into place. So with the ICHRA, employees are going to have whatever individual plans are available in their market based on where they live. And at this point, for most counties, that's going to be 50 plus plans. So they are going to have a lot of plan options that they're going to be able to look at and decide upon based on what their individual needs are. With premiums, with an ICHRA, it's going to be dictated by the stable individual carrier market based on where they live. With a traditional group plan, rates are dictated by claim fluctuation and the annual increases. So those can really range quite heavily based on claim usage for an employer and their employees. So employee classification. So with a traditional group plan, employers cannot create different contributions based on employee class. With an ICHRA, there's 11 different classes available to them. And again, that's going to be something that we're going to go over in our next part. But there is the ability to give different contribution amounts based on hourly versus salary. We're going to be able to give different contribution amounts based on age, based on where an employee is located. So if you have employees that are in, Florida, Kentucky, and Ohio, we can give different amounts to each of those employees because in the individual market, those premiums are going to be different from state to state. So again, we'll go over that in more depth on our next webinar, but that is a great function of what is available with an ICHRA versus having a traditional group plan. Portability. So with a traditional group plan, the employer owns those plans. If the employer has 20 or more employees, then they are going to have to offer COBRA, and then an employee would be able to keep that plan for 18 months under the COBRA, which essentially is they're paying the full premium of that plan plus a 2% admin fee. With ICHRA, the employer does not own those plans that the employees are enrolled in. Those are individual health and plans, and they are owned by the employee. So if the employee were to leave that employer, they just take that plan with them. So the only thing they're going to do if you have a payment vendor in place is they're going to change out that banking information to their own personal bank account, and they're just taking over the full premiums. They no longer, obviously, they don't have those ICHRA dollars available to them, so they're going to pay that full amount. But it does make it a lot easier to make that switch if they were to leave the employer with an ICHRA. The employee experience. So with an ICHRA, employees feel more empowered with the plan options and premiums because they get to choose what fits their needs, what fits their medical needs, what fits their budget. They're going to know what their employer is contributing to them for their health insurance premiums, and they can decide, okay, my employer is giving me X amount of dollars, I can afford X amount in a premium, and I want to make sure that my plan has the ability for me to have an HSA. Or I really don't want a high deductible plan because that's what my traditional, my employer last month was offering me, was only an HSA eligible high deductible plan. I don't want to get a bill from my doctor's office for $150. And yes, I might have the funds sitting in my HSA account, but that hurts me. Or maybe I never put money into my HSA account because I don't have extra money for that. Now I have to pay $150 just because I went and saw the doctor because I had the flu or whatever it may be. I would like to go to a copay plan where I know if I get sick, I can go to the doctor and pay a $30 copay versus getting that invoice for $150. So they're going to be able to make these kinds of choices on their own. They don't have to, the employer is not going to be saying, nope, this is all that's available to you. So that's what's really great about the ICHRA is that we're really empowering the employees to have their health insurance plans personalized. And then we've already gone over and over again, you're not going to make 20, 30, 40, 50 employees all happy with the one or two choices that we've made available to them in a traditional group health plan. So it's just not going to happen. And most employers want to do what's best for their employees. So they spend a lot of time agonizing over what is the one or two plans that is going to fit the needs of the many. They're spending a lot of time. They're stressing over it. And then they always are not going to make everyone happy. So that's a very, not a great feeling for the employer, honestly. So it's great that they can now just let that go. They don't have to worry about that. They're going to stay out of that process completely. They're just focused on the budget. And then ACA compliant. Oh, that's in there twice because it's important. They're both ACA compliant. So this is great for large ALEs, so applicable large employers, those that are 50 or larger. This does meet all of the requirements. In part 3, we're going to go over all the compliance that has to do with group health insurance. And like I said, ICHRA is group health insurance. So we're going to go over all of the ACA compliance, ERISA, and all that in part 3. So make sure at the end of this presentation, we'll have QR codes for you to register for part 2 and part 3. Highly recommend that you definitely sign up for both of those, especially part 3, because compliance is not being talked about enough. So this is how I squirrel. So let's move on. All right. So who can benefit? So ICHRA isn't just for one type of business. It's a great fit for a variety of use cases, from cost-sensitive startups to established employers looking for predictability and less administrative burden. So I'm sure those of you who have heard me speak about ICHRA before, you've heard me say you need to have a solution in your back pocket. So I'm really going to try to stop saying that, because you actually need to have this in your front pocket. So this should be something that you are discussing with all of your employer groups. So this should start being part of your benefit strategy that you are presenting to your clients. So currently, you are most likely bringing up level-funded, self-funded solution to your group clients. But you should now be including the ICHRA as an option as well when you are discussing all the options that are available to those employers. If you don't, they're going to start hearing about it. They're going to hear about it from another broker that's trying to steal that business from you. They're going to hear about it from maybe a networking group that they're a part of, maybe on the internet, in LinkedIn, Reddit, the news. They're going to start hearing about it. And if you're not the one that is bringing that to them first, you have the potential to lose their trust. So you, to them right now, are their trusted advisor. So if you haven't brought a potential solution to them, then how can they trust you? Because you've left out a huge part of what is now part of that benefits solution to employers. It might not be the best fit for them, and you will be working that out with them and figuring out what is the best fit, but you need to bring it to the table. You need to be talking about it. The worst thing that can happen to you as a broker is if they do hear about it from someone else first, especially if it is a broker, because now like I said, you've potentially lost that trust, and they're going to go with that other broker if that ended up being a better solution, because you didn't bring it to them first. So why should they? You can't go now. They come to you and they say, oh, I heard about this ICHRA. This broker was telling me about it. It's going to save me X amount of money. And then you say, oh, yeah, I can help you get put into that. Why would they decide to continue to go with you and not go to the person that brought them that solution? So you need to you really need to be well informed. And you made the first step, you're on this webinar, so that's great, but this needs to be part of your solution package. This is not a back pocket solution any longer. This is a front pocket solution. So let's see here. So let's talk about this case study. So an employer, small employer, 40 employees. They have employees in 2 different states. The group plan was too expensive, so they had low participation because it was too expensive. What we did is we put in an ICHRA with different contribution amounts based on location. So like I said, with an ICHRA, you can do that. Because of that, and because the individual premiums came in so much less than what the group health insurance premiums were, we were able to build on the participation for the employer. So now they're offering what is looked to be as a great benefit in their employees' eyes. And then also they were able to save money. Not only the employers saved money, but the employees did as well. So like I said, if you do have employers that have employees in multiple states, this can be a really great solution for them. And then, here's our second case study I want to talk about. So this is just everything's really building on, and I know I seem like I'm repeating myself over and over again, but it's all building on itself because these are real life examples. These are employers that are coming to us, or brokers that are coming to us with their employers looking for solutions. So this second case study is a manufacturing company. They had a traditional group health plan. They had rising group health plan costs. Their broker wasn't coming to them with any new solutions. And so they had a younger HR person in their company, and he was looking on the internet to see if there was something out there that he just hasn't heard about. And he found out about ICHRA on Reddit. And so he started researching and looking up ICHRA vendors, and came across us as a solution as well, reached out to us, and he was having the different ICHRA vendors come in to him and the CEO, and they were having their meetings talking about ICHRA and what it can do for them. And it was going to end up saving them quite a bit of money. So they decided to move forward with switching out of their group health plan, moving to ICHRA. They did end up choosing us to help implement that with their company. Every single employee I met with was extremely happy about it because every single one of them saved money in moving to the ICHRA. They were not on a really great group health plan. Mediocre, so the individual plans ended up being comparative benefit-wise, but came in much less money. So they all came away from our meeting with them, getting them enrolled in individual plans, feeling like they had a raise because now they were going to have less money come out of their paycheck to have similar benefits. So they were all extremely happy. The employer was happy because, one, all their employees were happy, but also, and overall, we ended up saving them annually a little over $40,000 a year. So it was a great savings for the employer. And so they then went to their old broker to tell them that they're canceling their group health insurance plan. And just like I had said before, the broker said, oh, well, we do ICHRA, we can help you with that. And the employer's like, no, we already came up with someone that's going to help us with that. We came up with that solution. So kind of like that old saying, a little, too late type of situation. So don't be that broker. Be the one that's bringing it up. And like I said, maybe it's not going to be a good fit, and that's fine. But you can find that out along with that employer if it's going to be the right fit. But at least you've brought it to their attention, and it's not something that they are going to hear from someone else and be like, wait, what are you talking about? Because you have brought that to their attention. All right. So the employee experience. So from the employee's point of view, like I had said before, it's empowering. They get to choose the plan that works best for themselves, and their family. You, as the broker, are going to provide the employees with good education and support. That is the key to making this a smooth transition, especially if they're used to a traditional group plan. So the employee experience is extremely positive from my experience. So the next thing I really want to delve into this, I'm actually kind of excited about this, is let's debunk some of these myths that are out there. So there's a lot of misconceptions, and let's go over them. So this is what I'm hearing from brokers who really are, I will say, digging their heels in the sand and don't want to talk about ICHRA. For whatever reason it may be, they don't want to learn it, or they just don't feel confident in it. So they're maybe bad-mouthing ICHRA a little. So let's talk about what are these myths that they might be telling employers or even telling other brokers. So the first one, ICHRA is only for large employers. So a lot of folks assume that ICHRA is a solution only viable for companies with 50-plus employees. In reality, some of the most successful implementations I've seen are with companies with as few as 2 or 3 full-time staff. So it's a scalable tool, and it gives smaller employers access to benefit strategies that they couldn't afford under traditional group plans. So this is not a solution just for large employers. It's a solution for small employers and large employers, from 1 employee to thousands of employees. This is a great solution for all sizes. All right, myth number 2. ICHRAs are too complex and they create an administrative burden. So complexity is a common concern. But the modern ICHRA platforms handle reimbursement, documentation, compliance efficiently. So we partner with vendors who are going to simplify that process from setup to a day-to-day operation. So before all these ICHRA vendors, these payment platforms came into the market, ICHRA would be administratively burdened. Because the way it would traditionally work is that the employee would go out and get individual insurance from the individual market. They would pay the whole month up front, the whole month's premium up front, submit to their HR department or the owner of the company their receipt of what they've paid. Then that employer, it was on them to verify that the plan that the employee chose was, 1, ACA compliant, and then they would have to reimburse those employees based on whatever their contribution amounts were. There's also, there's ICHRA notices that have to be given to the employees before you even start the ICHRA. And then there's just all of the general compliance that you have to maintain in having a group health plan. So they're doing all of this on their own. So yes, that can seem like a lot, but like I said, now we have all these ICHRA payment platforms in place. We have professionals and consultants and people who really are experts in the ICHRA field that are able to help not only the brokers, but also the employers, so that it's no longer complex. It's not administrative. It's actually less administratively burdensome, because like I had said before, now the employer is just really focusing on the budget aspect of having a group health plan in place. So myth number 3, ICHRA eliminates my ability to offer group benefits. So I always remind employers, ICHRA, and brokers for that matter, ICHRA is a group health benefit. It just doesn't look like the old market, the old model. So you're still offering a tax advantage, employer-funded solution that helps employees access coverage. You're just giving them choice and control instead of locking them into one group plan. All right. Myth 4, ICHRA means employees are on their own and they won't understand or accept ICHRAs. Not at all. So, all good ICHRA strategies include support. So employees don't have to navigate plan selection or enrollments alone. They still get help comparing options, understanding subsidies, if applicable, and finding coverage that fits their needs. Change can be hard. So, but we're going to equip the employees and the employers with communication tools, onboarding assistance. So once employees see that they can choose their own plans and premiums, many prefer the ICHRA approach. So you as the agent, you're going to be assisting those employees, or you're going to be working with someone that's going to assist those employees. We are never leaving the employees out on their own. Go to healthcare.gov, figure it out. That's not going to happen. So we don't want that to happen. We don't want them to have a bad experience, because if you're a group broker, you know if the employees are having a bad experience, you're not going to have that group for long. So we want to make everyone happy. So by making the employees happy, educating them, giving them what they need to make these good choices for themselves and their families, you're going to make the employers happy as well. So, all right, ICHRA and QSARA are basically the same. So this one also comes up a lot. So because, like I said, the QSARA came out first in 2017. So people are like, well, they already have a QSARA in place, or we already talked about QSARA, they weren't happy with that as an option. ICHRA is not the same as QSARA. They're both HRAs, but the key differences are the flexibility and scalability of an ICHRA. An ICHRA allows class-based design, it has no reimbursement caps, it works well with ACA compliance, where QSARA is more limited, it's a fit for only small groups, where ICHRA tends to be a better long-term solution. Individual market variability makes ICHRAs unreliable. So variability does exist, but we work with licensed agents to guide employees through plan selection, whether that is you, the agent I'm talking to right now, or whether that is someone on my team. Maybe you have someone on my team come and work on this. We are going to guide those employees through the plan selection. So the ACA guarantees access regardless of geography, and employees often find more choice than in the one-size-fits-all group plan. All right. ICHRAs can lead to higher costs for employees. ICHRAs give employees the power to control their healthcare spending. We help them navigate the subsidies, again, if applicable, the plan tiers, the benefit trade-offs, so they can make the most of their employer's contribution. So let's talk about the subsidies for a minute. So with an ICHRA, an employee does not have the choice of getting a subsidy or take the ICHRA dollars. It is going to be based on affordability. So what that means is you take the monthly premium of the lowest cost silver plan where that employee resides. You subtract from that premium the ICHRA dollars, so the dollars that the employer has decided to contribute to the employees for the health insurance, and whatever's left over is the employee's portion. So that's going to come out when you're using a payment platform where the employer is going to take out the employee's portion of premiums that will come out of their paychecks. Pre-tax, as long as we have that Section 125 in place, and also based on how the individual enrollment was done. So we'll get back to that in 1 second. Let me finish the affordability. So if that amount that the employee is going to have to pay is more than 9.02% of their household income, then that's going to be considered unaffordable for the employee. And then at that point, the employee can waive the ICHRA and then get a premium tax credit instead through the marketplace. That is the only time they are legally allowed to get the premium tax credit and waive the ICHRA is if the ICHRA dollars that they're going to be receiving, they are considered unaffordable per that formula I just told you. So with the, if it's a small employer, so under 50 employees, if that were to happen, it's not that big of a deal. There's no penalty to the employer. It doesn't hurt them in any way to make those contribution amounts unaffordable and for the employee to waive the ICHRA and get the premium tax credit instead. Sometimes that's going to be more beneficial to the employee. If it's a large employer, we want to make sure those ICHRA contributions are considered affordable, because if they are not considered affordable and an employee goes out there and gets a premium tax credit, then that is going to open up the employer to penalties. We don't want to do that. So we don't want to advise that for an employer, and we want to make sure that we are consulting with them, providing them the right guidance as to what those contribution amounts should be so that they can keep those ICHRA dollars considered affordable per those ACA guidelines. The other thing I had just said, but let's get back to, so I said their portion will come out pre-tax based on how the enrollment was done. So in order for the employee's portion of premiums to come out of their paychecks pre-tax, yes, we're going to have that Section 125 in place, but also the individual enrollment has to be done off exchange, or also what's known as like direct through the carrier. So you cannot go to healthcare.gov and get them enrolled in a plan and their portion be pre-tax. At that point, that's considered on exchange, and that would have to come out of their paychecks post-tax. So it can still come out of their paychecks, but would be on a post-tax basis. So if you use a platform like ICHRA, most of those plans are all on exchange. There is a little toggle at the top where you can click to off, but there's only a few carriers in there available for off exchange. So typically if you're using ICHRA, you are using an on exchange platform. Therefore, if you're using that platform for your enrollments, those would have to come out post-tax. In Ohio, there are a couple carriers that don't have a direct platform available, so you can't enroll employees off exchange if they were to choose that carrier. And so you're saying, well, why would they want that carrier? And one of the reasons is, specifically, we're talking about CareSource. Molina's another one that only has that on exchange platform available, and that's this year. What I'm hearing is things are going to be changing for next year. Hopefully there will be an off exchange option for both of those carriers, but currently this year there is not. So, but CareSource has a really great network. They have the children's hospitals in their network. So that is a reason why a lot of employees are drawn to a carrier like CareSource. And we don't want to not make that available to an employee, but we just want to make sure that they are aware, yes, we can get you enrolled in one of these plans, but your portion will come out of your pay post-tax versus pre-tax if you were to choose basically any of the other carriers. So let's see, where am I at? All right, myth number 8, employees have fewer plan options with an ICHRA. In most markets, employees have access to multiple insurers, metal levels, and provider networks. It's personalized coverage, not limited menus, and that's a big plus. In an individual market, there's some carriers that aren't even available in a traditional group world. So there are carriers that only write individual health insurance that those employees would never have known about them if they hadn't moved to an ICHRA, because they don't offer traditional group plans. So we are actually opening them up to not only more plan options, but more carrier options. ICHRAs hurt company culture and morale. So a group plan treats everyone the same, but employees aren't all the same. With ICHRAs, you're saying, we trust you, Mr. Employee, to choose what's right for your family, and we're going to support you in that. So we trust that you're you're a big girl, you're a big boy. You can pick what's going to be best for your family, probably a lot better than I can. Well, not me as the agent, but me as the employer. So, and we're going to support you in that. So we're going to support you by funding the option for you to get a plan that's going to meet the needs of yourself and your family. So ICHRAs are a compliance risk. We ensure ICHRA plans include all the required documents and processes like substantiation and affordability testing. With our compliance support, there is no guesswork, just peace of mind. So that's why it's really important, again, that when you are implementing the ICHRAs, if you're not well versed in the compliance pieces of it, that you are working with experts in the field like Cornerstone that can assist you in making sure that you are meeting all the compliance pieces. But there's no bigger compliance risk than there would be in having a traditional group health plan in place. So there's no difference when it comes to the two. You need to make sure your groups are in compliance regardless of which way route they go. Part 3, we're going to talk about that because there is a lot, but we're going to go through it and make it a lot more simple for you. All right, myth 11. ICHRA tax treatment is unclear and risky. So this is one of the biggest advantages of ICHRA. Pre-tax employer dollars, no payroll tax, no taxable income to employees. So as long as it's paired with a qualified coverage, so has to be an ACA compliant individual health insurance plan. So they cannot use ICHRA dollars to get enrolled in one of those health share ministry plans. That is not an ACA compliant individual plan. It's not even insurance, really. They cannot use those ICHRA dollars for a short-term health insurance plan. Again, that is not ACA compliant. They cannot use those ICHRA dollars to be on their spouse's employer plan because, again, that is not an ACA compliant individual health insurance plan. So as long as we are making sure that we're getting them enrolled in the correct plans, the tax treatment is actually very clear. Myth 12. ICHRAs cause adverse selection. Employers are no longer on the hook for the high cost claims that a lot of times can occur in having a traditional group health plan. The risk is spread across the entire individual market, which is exactly what the ACA intended. So that's a huge financial relief for growing businesses. So you have small groups or even larger groups that have 1, 2, 3 large claimants. You've now just made those premiums hard for all the employees, not just those employees who are dealing with the health issues. And that's why these renewals are coming in, 22, 50, 78, 120% increases. I've seen them all. It's crazy. You're dealing with a lot smaller pool of people than you are on the individual market. Individual plans are not medically underwritten. So the renewals from year to year are not going to increase based on that individual's claim usage or their family's claim usage or their group of employees, that their coworkers, because it is now spread throughout the whole individual market. All right, and the last myth we're going to talk about, myth 13. The individual market is confusing, expensive, and full of poor coverage options. So I've also heard, the individual market sucks. That's a common thing we hear, right? And for those of us that have been around since the beginning of ACA, we're probably the ones that are talking about that the most. So this is probably one of the most common and emotional objections we are hearing from actually mostly brokers versus the employers, because employers aren't really aware of the individual market. But it is rooted in some truth from the early ACA years. So the individual market had a rough reputation in the early years post-ACA, especially before 2018. But today, the markets have stabilized, carriers have strengthened their networks, they've improved their plan designs, and the overall shopping experience has improved significantly with tools, brokers, and tech platforms. So individual market is not the same as what it was when ACA first came about, and it is improving, and we're seeing it improve, I would say, year to year. I mean, there are some states, I know most of everyone that's on here is probably in the Ohio market, but there are other states that have PPO plans. And I am hearing some rumors out there that there might even potentially be a PPO offering in the state of Ohio for next year, 2026 or 2027. So that'll be huge. I know, fingers crossed. But we have a carrier today that offers reciprocity. So what that means is, with that carrier, if they have a network in another state, and that, let's say that employer resides in Ohio and they're in Florida traveling, that carrier is located in Florida as well, and they have a network there. So if that employee is visiting Florida and needs to go to the doctor, they're going to have in-network coverage as long as they're in that network with that carrier, using a network doctor with that carrier in the state of Florida. So it's not the same as PPO. There's still no out-of-network coverage, but it's still coverage in another state, which we have not had, since 2014. So so the carriers are learning, the carriers are growing, and the market is becoming better. So with an ICHRA, employees are getting the choice as well. They're going to get to choose, like I said, maybe they do want an HSA qualified plan, they want a copay plan. They're going to be able to pick something that's tailored to meet their personal health needs that are going to fit a lot better than that one-size-fits-all traditional group health plan model. So ICHRA is not a risky experiment. It's a modern, flexible, compliant, and strategic way to offer health care benefits. So key takeaways. Just going to go ahead and, I don't need to, we'll get back here real quick. You guys can read over that. So controls costs, reduce administrative hassle. The employees gain the choice and portability. It's a flexible, compliant alternative to the traditional group market. So to wrap up, ICHRA is not just a cost strategy, it's a cultural strategy. So it aligns health benefits with the way modern workforces want to live, work, and choose coverage. So what we at Cornerstone can do for you is that we do partner with multiple payment platforms to help make this administrative process simple when implementing an ICHRA. We have payment platforms that are going to pay all the different carriers that employees have chosen, so an employee is not going to have to upfront any costs. They will be able to, financially it's going to feel like a traditional group health plan. So this payment platform is going to pay all the different carriers. So you have 20 employees, maybe between the 20 employees, there's 5 different carriers out there that are giving insurance to these 20 employees. This payment platform is going to make those payments each month to all these different carriers. They're then going to consolidate those amounts into one bill that they're going to give to the employer. The employer is going to pay that invoice to that payment platform and then take out the portion that belongs to the employees, so the premium minus what they decided to contribute, and those ICHRA dollars, whatever's left over is due by the employee, so the employer is going to be taking that out of their paycheck. Set up very similar to having a traditional group plan. You know, a traditional group plan, let's say they have an Anthem group health plan, Anthem's giving them one bill, the employer one bill, and then the employer takes out the employee's portion out of their paychecks. Same way with the ICHRA when we have this payment platform involved. Payment platform is keeping track of the plan selections. They're going to be able to provide reports for the different reporting requirements, PCORI, the 1094, all of the different reports that are needed when having a group health insurance product in place. Again, we're going to talk about that in part 3. So that's what we are able to do. The other thing is, I want to say, and I know there's a lot of brokers on this that have worked with me already, we are here for you. We don't want you to have to turn away any prospect because maybe you still aren't confident in ICHRA and how it works and all the different options available within ICHRA. Or you come across a group that does have employers in multiple states and maybe you're not licensed in all the other states. we don't want you to have to turn anyone away. So we're going to help fit the gaps. We're partnering up with you. We're going to fill in all those holes that you might have, and so that you don't have to turn anyone away. So let's say you have an employer that has, employees in Kentucky and you're only licensed in Ohio. We'll write those employees for you. We'll give you a percentage as a referral of the commission for life of those employees. But now you've not had to turn this group away. You're still keeping that relationship. You're not competing against anyone else, and you know that the employees that are in Kentucky are in good hands with a trusted advisor and consultant and partnership that you have here with Cornerstone. So if you need me to meet with a group with you in person, Zoom, phone call, whatever it may be, I'll do that. I can do that for you. I'll do the whole entire presentation with the employer, or maybe you just want me to be there as a second set of ears to maybe in case you're not positive on a question that might come up. I'm there to jump in at that point. So I am there with you every step of the way, however you want me to be there. I will be there holding your hand, making you have that, extra support that you, just to make you feel more confident in offering this as a solution to these different employers. So, all right. So, like I had said before, we have Part 2 is coming up in 2 weeks from today, June 12th. That is going to be, we're going to talk about the different classes and how different contribution capabilities. So designing and deploying your ICHRA strategy. And then 2 weeks after that, June 26th, we're going to do Part 3, the ERISA of it all. So that is all the compliance pieces. In depth. You need to understand how the compliance works. We have brokers that are going to these startup ICHRA vendors who are not health insurance licensed, don't have experience in the health insurance world, have never had real world, even implementing a traditional group plan, individual plan, Medicare. These ICHRA startup vendors are fintech. That's what they are. So they don't even understand all of the compliance and regulations involved in having a group health insurance plan. So you need to know as a broker, it's on you, because the employers, they don't know all the regulations involved in having a group health insurance plan. They're looking to you as the expert. So if you're not telling them that they need to do X, Y, Z, and they get audited and they get penalized, they're going to be pissed at you because they would have expected you to come to them. So I want to make sure I'm providing you with all those tools and knowledge so that you know what's coming up. When you do partner with us, I also, and Cornerstone, and we're here to help make sure, hey, it's time to do this, because there's compliance throughout the year. It's not just a one-time of the year situation. So we're going to help make sure that you're keeping your groups compliant as well. So Part 3 is extremely important. All right, so those scan those QR codes if you want. There'll be links. There's going to be emails being sent out, and then we're going to go through questions. So what I'm going to do is I'll leave this screen up a little bit longer so you guys can go ahead and register for those webinars, and I'm going to go over some of these questions that came through. And this is being recorded, so if you do have to hop off, because I do realize, we're about 2 minutes till 11. And Jess, are you on the phone?
Yes, I am.
Jess, this isn't going to automatically stop, is it?
No, it shouldn't.
Okay. So I'll stay on until I answer all these questions. We can do that, right, Jess?
Yeah, I think so. If it does pop off, then we will have your questions on the report that we receive, and we can either have Leo follow up with you all with the answers to that, or we can have maybe a separate Q&A session where you guys come back and ask whatever questions you need to ask. But I think that will be okay if you stay on for a bit.
Okay. So you guys can stay on. Hopefully it doesn't stop us in 1 minute. If it does, I'll definitely reach out. But this is being recorded as well. So if you do need to, you have an appointment in 1 minute, you'll be able to, find the recording of this and hear the answers as well. So let's go to the first one. So if an employee cancels their coverage, will the employer be notified and then be able to stop the contribution, assuming employee is still employed with company? So an employee should not be canceling their coverage. That would be weird for them to do if they're still employed with the company. But if that happens, the broker, and no one knows that this is happening, so whoever the AOR is of that policy is typically notified by the carrier. If you're looking through your cancellations as the broker writing that, there's really no way to know that they're canceling. The one way I guess we would know is the payment platform. They would be notifying us that that employee's carrier has not been taking premiums out. So that would be another way of us knowing, hey, something's going on with this employee, because the payment platforms are very on top of the financial aspects of this. So they will be reaching out to me and saying, hey, Lael, Jane Smith, Anthem didn't take out the premium for June. What's going on there? And so then I'll be reaching out to, the agent saying, well, you need to look into Jane Smith's policy because the Anthem didn't pull out the premiums for that month. So we would know at that point. As far as the employer making contributions, so they are paying the payment platform. So once we notify that an employee's policy is being canceled, then we would take that bank account information away from that plan. We would stop it from being allowed to be drafted. So that's kind of how that would work in that whole process. So it can get a little tricky if an employee is just doing it blindly. I have not had that happen, and that would be very odd for an employee just to cancel, still be working at the employer and canceling their coverage. Just doesn't make a lot of sense. So, but I guess it could happen, and we would figure it out. We're not going to know the day it happens. No, just like you wouldn't if you were writing an individual plan, you wouldn't know until you're looking at your reporting. But we probably would know a little bit quicker than if it was just an individual person that canceled their policy without you knowing. Because again, like I said, that fintech is in there saying, hey, why isn't the carrier taking out these premiums any longer? All right, will there be PPO options in Kentucky? I don't know, Angela. I'm hearing the PPO, actually, I think the rumor I heard was Ohio and Kentucky. But that, again, it was a rumor. It was a rumor from the carrier, so that's a positive. But they said 2026, 2027, I don't know. Until I actually see things like it's definite, I take it with a grain of salt because we don't know if it will end up happening. Let's hope, fingers crossed. All right, so how will the upcoming governmental changes to the ACA impact ICHRAs? Are ICHRA employees limited to off-exchange plans? So the upcoming governmental changes to the ACA hasn't happened yet. Still has to pass the Senate. Let's hope it passes. It looks positive, but again, kind of back to what I was saying before, is I am one of those people that don't like to speculate because I have so much on my plate. I don't have time to even take the what-ifs into consideration until they become definite. So we all kind of know what those changes are, what's happening, but I'm not going to speak to them yet until they actually become definite, because it might not happen. So I guess I like to say I'm a realist. I don't think that's a negative thing, because I hope it's going to happen, but why are we going to spend time on something that hasn't happened yet? I do know that if it does pass, it's not going to go into effect till January 1, so we will have plenty of time to talk about those changes. Are ICHRA's employees limited to off-exchange plans? So no, employees are not limited to off-exchange plans. You can write them into on-exchange plans. However, their portion will have to come out post-tax. So we want to write them off exchange if we can, so that they can get the full tax benefit of having a group health insurance plan. All right, and is ICHRA a good fit for self-employed with no employees? Okay, so if it's an S Corp or an LLC filing as a partnership, those owners and their dependents, spouses and dependents, are not eligible to participate in the ICHRA. And that is because the government does not want them double dipping, because they can take their health insurance premiums and have it deducted as a business expense. So they're going to get those tax benefits in doing that. So they can't do both, and that's why. Now, if it's an S Corp or an LLC filing as a partnership, they can still get an ICHRA started for their employees. They just can't be a participant in the ICHRA dollars. You can still get them enrolled in an individual plan. They're still going to get tax benefits, but in a different way that their employees are getting the tax benefits. And again, that's because they can write off those health insurance premiums as a business expense. Okay, and then it's a forgive it. How much is the ICHRA admin fee for the vendor? So this also, like I said, it's going to be dependent on the payment platform that you that you end up using. The one that, so like I said, we have a couple that we partner with here at Cornerstone, and it's going to be dependent on the size. But for small employers, and not small employers by the legal terms, but employers, I would say that have under 100 employees, it is a $40 PEPM, so $40 per enrolled employee per month, and that is very similar to what an employer would be paying with a traditional group plan. The only difference is when I'm doing a proposal, it is right there as part of the numbers. You know, the admin fee is $40 PEPM. It shows, 40 times however many employees, and so they see that amount. It's very, very clear. With a traditional group health plan, the commissions are built into the premiums. So legally, group agents are supposed to disclose what the commissions are getting from that carrier for that traditional group health plan. But with an ICHRA, it is definitely spelled out, but the commission amounts are pretty similar to what most brokers are getting in the traditional world with a traditional group health plan. So, and then part of that admin fee goes to the payment vendor because they are not doing all of that work out of the goodness of their heart. And part of that does go to Cornerstone for all the services that we're going to be providing you when we're working with you hand in hand with the implementing the ICHRA with your group. Not just implementing it, but all year long and on a renewal basis as well. Okay, so with the ICHRA plan mentioned earlier with one employee, is the business owner and his or her family also eligible for the ICHRA? So I kind of just touched on this, but just so, for instance, that one employee, it is a LLC filed as a partnership, this group. So the employer, what we're going to do with him is, like I said, he's not eligible to be part of the ICHRA, but we are going to get him enrolled in an individual plan, actually on exchange, because he'll qualify for the premium tax credit, and then whatever's left over, his portion, he will be able to have that deducted as a business expense. So that's for the owner, and then the employee, we're just putting him using those ICHRA dollars. And all right, Brad's here too. Okay, Brad, hi. What vendors do you use? We have groups to contact now. So with the vendors that we use, so currently we're using NextGen for our small groups. They really are the best from what I've seen, they're the best for small group, and that's because they have no setup fees and they have no minimums, no annual fees. It's just that 40 PEPM. However, they don't work directly with brokers or groups, so it is you would have to come to us at Cornerstone here. If you have groups that you want to contact, just reach out to me. Let's go to my thing real quick here. So you can reach out to me, set an appointment on my calendar. That QR code is to my calendar. Call me, email me. We can get a proposal. I can get a proposal for you, and we can look at that. If it's a large group, we have a couple other vendors that we work with, but they do have one has an annual fee. They both have minimums. So it does get a little more costly with the larger groups, but they're also used to that because they typically are paying more in administrative costs. So, all right. will we get an email to register also? The QR code isn't working for me right now. Yes, so we're going to send an email just like you learned about this webinar. You will learn about part 2 and part 3 as well, where you can click on the link and register that way as well. And hopefully not all of you are having problems with the QR code. Okay, so if an employer gives a lump sum, can the employee shop with Health ICHRA? I mean, yes, but that's not going to be the ideal way because A, they've now are enrolling in on-exchange plans, so they're now not going to have their portion of the premiums come out of their paycheck pre-tax. And then if you're just like, here, employee, figure it out, go to Health ICHRA, I'm assuming there's no payment platform involved at that point. So now the employee is having to pay the whole month's premium up front. That can be a lot of money, especially for an employee that's used to having a traditional health plan in place. They might not have $500, $600, $700 all at once or more, you know, to just put down. They're used to having it broken out from each paycheck throughout the month. So that's a lot of money at once to expect an employee to come up with. And then have to wait for reimbursement. So it's not the recommended way. It's not going to be a great experience for the employee, and it's not going to be a great experience for the employer. But technically, yes, they can do that. And then, yeah, all right. So thank you. Client we talked to the other day had that question. Okay. Are agents notified when employee terminates to help employee with possible subsidies to keep plan, assuming that creates the SAP? So yes, that does create a qualifying event for employees to get on the on-exchange and get a subsidy if they do leave their employer. So yes, that does create. So agents, yes, you are notified. Part of So I have a whole step-by-step when an employee terminates what the employer is to do. And one of those things is they are to be notifying you, the agent, that Mr. Employee is terminated. Not only that, the employee gets a letter letting them know that they need to contact you if they'd like to continue with their health insurance. And at that point, that's when you can have that discussion. You know, if they're not going to another employer, you know, then possibly a premium tax credit, you could get them switched into an on-exchange plan and get them onto a premium with a premium tax credit. So there are going to be notifications sent out where you're going to know as the agent. And also, so you know, with even implementing an ICHRA, that creates a qualifying event for employees. So if an employer wants to implement an ICHRA mid-plan year, so mid-calendar year, we can do that, and everyone's going to be eligible to get on individual health and plan, even though we're not in the middle of open enrollment currently, because the fact that their employers implemented an ICHRA, that is the qualifying event, and there will be documentation that will be needed, but also will be providing for you to upload to those carriers that shows them that this is an SED. And okay, so. Okay, so does the payment platform have a quoting tool? So as far as that, I do all the proposals for you. So if you have a group that you are interested in looking at an ICHRA, what I need is for you, email me and I can send you a census template, but essentially I need their name, date of birth, gender, whether they, tobacco user, if you have that information, zip code and county, and then also salary, because that way, the salary is not, if you don't have that, that's fine. But if you do have it, then I can look at affordability in advance. And then I will, if they have a traditional plan in place currently, I would like a copy of their last renewal, and then what their current contribution strategy is. If it's a virgin group, obviously just the census, because there would be no renewal. And if the employer has some sort of budget in mind, then let me know. If not, that's fine. But then off of that information, I'll create a proposal with contribution strategy, samples, examples, And then also the real world, real numbers. So what the comparison of what their current plan is versus moving to an ICHRA, what those potential savings could be, or maybe there won't be a savings. So, so I will be doing that proposal for you. That's not something that we expect you to do on your own. And as the broker, oh wait, hold on a second. Let's see. As the broker, we would have to meet with each employee, get quotes for each employee, present that quote to each employee. So if you are a broker who writes individual health insurance plans, ideally that is what you would be doing if you want to keep the AOR. If you're like, I just don't have time for this, I don't want to do this, then Cornerstone can do that for you. And then again, like I said, we would be giving you you would sign up with us as essentially like a referral broker, and you would get 20% of that commission for the life of that plan. So you only have to do that if you want to. If you're working with a large group, if you're like over 50 employees, that's going to be really hard for you to do. At that point, we might put you with a different payment platform, which would allow the employee to go online through this platform and do the enrollments, and then come to you only if they have questions or need extra help. A lot of times what we see with those larger employers, the employees just seem better equipped to be able to do something like that, where a lot of times those smaller employers, the employees just need a little more hand holding. So, 50 or less, I'm going to recommend, that you actually spend a couple days at that employer and work with each employee, getting them enrolled. You're giving them that white glove experience. You're giving them a great experience. That employer is going to love you. The employees are going to love you because you're really giving them education as well, because you're going to have to educate them on the networks and things that they might not have been used to on a traditional plan. They're going to have to pay more attention to now with an individual plan. So you would handle the quoting and all of that however you normally handle your individual business. If it's a small employer. And then if we get into that large world, like I said, we'll be using more enrollment tools that would be available to those employees, and they would only come to you as needed. As the broker, okay, what if a new hire doesn't have prior coverage? Would they be able to join the plan or have to wait for renewal since they don't have an SEP? A new hire does have an SEP. These are group health insurance plans. It's a group health insurance product, I should say. If it's a new hire, they're newly being offered an ICHRA, that is a qualifying event. They will be able to get on an individual plan. We will have the documentation to give to you to get them enrolled in an individual plan. So that is a qualifying event for a new hire. FYI, the recording usually stops the time allotted, but you can keep the meeting open and talking, just not captured. Oh, okay. Thanks, Brad. All right, one last question here. You may have mentioned this. If so, I'm sorry. Can an ICHRA be started at any time of the year? Yes. ICHRAs can start at any time of the year. It opens up a qualifying event for it. So if it's a virgin group, the group has started an ICHRA, qualifying event for everyone to get enrolled in coverage, even if they weren't previously on coverage. Traditional group plan, they now technically have two SEPs because they're losing their traditional group plan, but also that ICHRA is being offered to them. However, even if ICHRA is effectuated mid-calendar year, they will all renew January 1. So all ICHRAs renew January 1, and that's because that is when individual plans renew. So the open enrollment period for all ICHRA groups is going to be from November 1st through December 15th of every year, and that will be, any changes being done will be for that January 1 calendar year. So they'll have a short plan year the first year if they're starting the group in the middle of the year, but then going forward, it'll always run January 1 through December 31st. All right, so I think that's it. So if anyone has any other questions, reach out to me, happy to help. Very excited to be working with you all. Make sure you sign up for those other two webinars. There's going to be a lot of more information to come, and that's it. It was really great. Thanks everyone for joining, and hopefully I'll be hearing from you all soon.